conversation a little bit. That's okay. All right, all right. We are live. It's Thursday, almost 10 a.m. Just we always try to go live, but just slightly before because Facebook tends to kick us out if we don't go live on time. So, good morning, friends, and welcome to another show with Coffee Time with Marie Torossian, CPA, and then Pedro Gonzalez, CPA. For those of you who are returning to our show, welcome back. Thank you so much for your support. For those of you who are new to the show, please put a thumbs up or a hands up in the comments so we know you are new and you are going to be learning so much with us. We are here to teach you all about accounting, tax, and all about business strategies. Just a quick intro. My name is Marie Terosian. I'm a certified public accountant and a chartered global management accountant, an experienced auditor, and a CFO. Currently, as a CPA advisor and transformation coach, I help my clients get them from 1 million to 10 million using my valuation MT framework. I have written a couple of books, and one of them is an ebook, which put the link down below. And one of them is a complete guide to business growth, which you can find on Kindle, and that's also linked below. Today with me, and always my featured guest and my partner on the tax side is Pedro Gonzalez CPA. Pedro, good morning.
Good morning. Good morning. Pedro Gonzalez, CPA, business and tax strategist, and helping our clients as in becoming tax wise.
Mhm.
We have had some good conversation about the impact of taxation in our lives, and that has been one of the missions in my life. It's not how I started my career, just like yourself.
Yeah,
We started in a different, but I saw the impact of taxation in,
absolutely.
in in business, so I took more of a passion to move into that direction, and I have made it my mission to help business owners, entrepreneurs, into becoming not only doing the tax planning, but also become tax wise. I think it's important for
Absolutely.
the you as an entrepreneur to have an understanding of taxable events, and so that you can make a better decision. So that's one of the goals, helping the business owners become more educated, providing them with the proper guidance in the area of tax planning. We are not just tax preparers. We are
Absolutely.
here as advisors and planners and strategists to help you. I have this ebook that we completed, the real estate investors guide on tax strategies. We're working on an S corp owners tax guide that also will be packed with some good ideas for the S corp owners. And we'll continue, putting together. Where 2022 is going to be an interesting year. We're going to be putting a lot of good material out there that's going to help our audience.
Absolutely, absolutely. And that's something that you and I connected from the first time, that it's always been something we wanted to put out there, a lot of great content, a lot of information that instead of our audience, our business owners going out there and spending hours researching that information, they can always come to us, and we together we can provide that information and help guide them through it.
Correct.
So yeah, before we start jumping into the detail of the content. So how was your week? What was different? What was new this week for you?
No, man. It has been overall has been good. I mean, I consider myself more of a positive
Hmm.
minded individual. And this is something we were just talking about. I
Yeah.
mean, you can focus on the rut, everything that's going in essence wrong, and that attracts, I think, the negativity and can affect our mindset and therefore our performance, and therefore
Hmm.
it's a chain reaction.
Yes.
So yeah, no, I had my own set of setbacks, but I continue pushing forward. Just exactly like we advise our clients.
Yes.
Yes, certain goals that are not being accomplished, but I focus on taking that into something positive. Okay, so what happened? How can I do better? And so, it's all good,
Yeah.
and so it is an interesting aspect. The conversation we were having right before we entered the
Yes.
live, and it's an interesting topic. And I imagine you go through a lot of that, especially when you're doing a business consultation and
Yes.
the transformation of how that can help you to go from point A to the where you really want to be.
Absolutely.
And that is not a straight line. That is what people need to understand.
It's
It's not
not. It's not. Yes, a lot of transformation doesn't happen overnight, and it
correct.
doesn't just happen because of some financial numbers we just throw
Yeah,
together.
correct.
It has to be a mindset shift for the business owner as well.
Right.
It has to be a certain expectations that they have for themselves and their team, putting all the right pieces of the employees together, putting the right culture together. It all plays a role so that everybody in the business is actually working together towards the same goal. And a lot of times that's a big mindset shift for the business owner as well. And yeah, I mean, for me, I personally had some really difficult weekend,
Yeah.
and the past few weeks I've been, it's still recovering from, being slightly sick, and my voice is not fully back yet. But I could choose to focus on the negative and all the things that did not happen, and just give up and like, oh, or it could be that you just keep focusing on what your goal is. You just
Correct.
take the next step, whatever it takes. You just keep going, because at the end of the day, that's what you're attracting positive. And that's also really important for business owners to understand. They need to also have the right type of people around them. So
Exactly.
when they have people like you and me that are positive, goal oriented, so you're not just getting a financial advisor, accountant, and a tax
Correct.
advisor, but
Correct.
you are getting very highly positive, motivated people that are going to push you and guide you to take the right type of action, mindset wise as well.
Correct.
So it's beyond just having a regular accountant or tax filer.
Yeah. Yeah. Yeah.
So yeah. And so yeah, so how about we kind of dive into it? So the past couple of weeks, we've been kind of doing a little bit of a series of the tax planning. We talked about investments. We talked about how life insurance could be part of tax planning. We talked about cryptocurrency and how that's taxable. And I think that was a pretty big hit, of course, because crypto is really taking over, but no one really realizes how difficult tracking and taxation is going to be. And this is going to be a continuous conversation. We're going to probably talk a little bit more detail further down the road as well. And then today I was thinking we could possibly talk about you know charitable donations and how that could play a role within tax planning. A lot of wealthy people, that's one way that they use part of tax planning. So why don't you kind of give us a little bit an overview of how that works?
Yeah. Donations. It provides a tax advantage. As of today, we still in our tax code, it does give you a way to lower your taxes. And number
Mhm.
two, is another way for you to accomplish certain social and other personal goals that you have in life. Yeah, I mean, like we were talking about goals, and so maybe part of your goal is to either help uh, a certain mission organization that you believe in, or creating your own, let's say, even at one point creating your own foundation or your own 501c3. And so one of the, and I'm not going to delve in too much into today. I think that's a discussion for another day. But the utilization, for example, of creating your own 501c3 as part of your tax plan.
Got it.
And again, it's a topic that's going to take, and I believe that if you really want to know, I encourage you, to contact, because there's vehicles out there that people are not aware. And I have had this conversation with some individuals, and they're like, why create a 501c3? Well, there's advantages to that, even for your own tax planning.
Sure.
So again, what we have to be looking is that shifting of income, you know what I mean, or taxable income. And the 501c3 becomes another tax entity which
Right.
does not pay tax.
Right.
That's why I was looking to the either deferral taxes We look into the creation of trusts
Mm-hmm.
as another way to shifting the income. But getting back into the donation, charitable donations, is that one, again, it provides you the tax deduction. Number two is another way for you to accomplish personal goals. You know, the as it stands right now is still deductible. There has been a few modifications, for example, for the smaller, and this came because of the COVID-19 in during 2020 that you can deduct small. I believe I can. I think it's like $300 even above the line, meaning that you don't have to itemize. And that
Mm-hmm.
was is a change for those individuals that wanted to make those kind of smaller donations and do not itemize. So you could still deduct that amount. There is something to keep in mind, and we talked last time about crypto.
Mm-hmm. Yes.
Uh, and some of the vehicles, and I think I briefly mentioned the shifting or donating some of the crypto.
Right.
In crypto, not only limited to crypto, but in general, appreciated assets. Um, because a lot of times people don't understand or realize that it's not limited to cash. I mean, you
Absolutely.
can donate appreciated assets, arts.
Right.
You can even
Right.
donate real estate. You can donate,
Property. That's
stocks, bonds. So you can donate now, crypto. And a lot of nonprofit organizations are accepting crypto, added
mhm.
that into their list of items that they will accept for donation. So anything that you're has appreciated, that's another way for you to shift some of that taxation that, if you were to convert or realize that gain, it becomes taxable.
Yes.
So a way for you to potentially shift that is by donating that appreciated asset. The advantage being is that then you get is a step up in the basis for the amount of the donation. Meaning that if you have a stock that you bought for $1,000, that's your cost.
Sure.
Now, let's say that now it's 10,000. You will have to either recognize a $9,000 gain,
Again.
or I can take that now appreciated stock that now is 10,000 and donate it, and I get a $10,000 donation. So so that is planning that needs to be looking to. And for individuals, we got another concern that has been asked. Okay, so but I'm not ready to. I still need some income.
Right.
What I mean is, for example, let's say, for example, either crypto or real estate. You have a piece of appreciated asset, but I'm not ready to simply give it away. I still need some sort of income between now and my final day. I still need some
Sure.
flow of
Sure.
income.
Right.
There's
Right. You're still
vehicles,
dependent on that income. Yeah.
correct, and there's ways to create, for example, a charitable remainder trust. That's
Mm,
another vehicle that you can utilize to fund the donation. You still get the donation now, but you can be written in a way that you can still have access to a flow of income.
hmm.
Now that income will be taxed, but it still allows you to have a stream of income
Right.
that you can utilize. You can then, based on your financial plan, you can say, okay, how much do I really need to have in a monthly or annual basis, and it still benefit from that appreciated asset, but at the same time, I can still take a write off.
Right.
And so those are kind of, again, the things that we do for our clients, and that's why I keep emphasizing that we're not here just to prepare your taxes. We are here to create strategies for you that can help you minimize, and in some cases defer as long as we can, the impact of taxation.
Right. Right. So yeah, I mean, a lot of times this is the time where most people start thinking about, charitable
Correct.
donations. And then it's good to know that there's so many different ways
Hmm.
that they could actually donate. And I know from a not-for-profit standpoint, if they were to create a 501c3, there's also a lot of reporting obligations as well. So just to a little bit of, from my experience on the 501c3 and 501c6 has been an area that I've worked for a very long time. There's a lot of reporting in that, and there's still a
Right.
tax filing required there. You may not be actually paying taxes, but you still have to file
Sure.
the report, and whatever has been gifted to you or whatever contributions you received. How have you been using the contributions for which programs, and if they're really applicable? So
True.
there's always going to be reporting. Let's put it that way. So
Yes.
whatever you decide to do, if you want to open up a 501(c)(3) because you saw this the show and you want to go ahead and open up one on your own, that's fine. Just make sure you got all your records in
Yeah.
line. You know, and you would still would be required to report that as at year end. So
Correct.
so some of the other areas I think we kind of touched base maybe last time, and I don't know if you want to touch on it again. Is the and maybe we can do a comparison here. Is the gifts versus donations, gifts to family, and how extensive can the gifting be? Because I think some people might think it's like a one person giving a gift, or is there how extensive can a one person versus a couple give gifts and have that be tax deductible?
Well, the gift between, let's say, for example, the gifting to a family member.
Mm-hmm.
Now, that is not going to provide you. That's a strategy to start transferring out of your state
Mm-hmm.
assets that otherwise will end up potentially be taxed in your state.
Right.
It's not going to provide you deductions. It's simply you're doing is, in essence, you're starting to strip your estate without being taxed at this moment, because there's a limit that you can still gift without being taxed.
Mm-hmm.
Now, so yes, there's no deduction, but it will allow you is then, if you're running the risk that your estate is starting to grow, which is might be good in one end, but at the same time you're probably concerned, well, we're going to end up being taxed. And there's some concerns now because there is this discussion of increasing the tax rate for estates and lower the threshold. That has not been established yet, but if that's the case, let's say they were to lower it. I think at one point it used to be like something like a 5,000 something or less. I'm sorry, not 5,000, 5 million. Uh,
Mm-hmm.
well, for some couples, that's not really a lot in estate value. I mean, if you start adding some pieces of real estate or something like that, that can quickly increase the value of your estate. So one of the ways is through gifting, and you
Mm-hmm.
start the process of gifting some of the either stocks or things like that, to start again stripping some of that estate that otherwise, if you do nothing, will end up being taxed.
So it's
Uh,
in a way you're like passing your wealth.
Correct.
Right. Right.
And again, those are all how the wealthy, how is it possible? Well, because they're utilizing it's there. I mean, again, it's not written only for. It's there. You just have to utilize it in how you and I help our clients is bringing all those resources to them. I mean, to our clients is to make
Right.
sure that that there is vehicles out there that allows you to, like you said, transfer some of that wealth, not subject to taxation, as long as you stay within the limit
Right.
at
Yes.
the time that is being decided to be done. Yeah, it changes, but you just monitor that, and based on that is how you're gonna make your decisions.
Yeah. So let's put it in some kind of an example. For example, if there's a let's say a couple, they're older, they have two children, they're married, they have four grandchildren. What is the maximum they could pass on? Let's say from wealth wise, just to throw out an example that someone one of our our audience that's listening that could kind of put it in perspective.
So that is yeah, okay. So the limit right now is 15,000 per
15.
15 per
Okay.
person. So, and a couple will become 30.
Okay.
So that is basically what you have available. In essence, you can start shifting, like you said, that wealth into your family members
Hmm. So
per
each one of
recipient.
them. for each one of the family members.
Yeah, to
So
as many individuals. Yeah, you just have a limit per
per
individual.
understood. So if we were, let me see. I think let's see if we can do something here. Can I? Again, guys, I'm trying to see if I can use something here that I can show. Testing things out, but I'm not sure ready yet. I was going to see if I could share screen and do some of the calculation here live, but I guess I still have to figure it out.
Correct. What happens that you hear the limit. That's the limit.
Mm,
One person. So
right.
for example, you go and you look anywhere. I mean, say what is the gift limitation? It'll pop up. Okay,
Right.
and you see a number. What happens
Yes.
is that, but you have to read the tax code is 15,000 to one person.
Right. So if it's a couple, it's 30. Yeah. That's the
Correct.
maximum.
Correct. But what if you have four children?
Yeah. So it's 30 per child.
Correct.
So
Not,
120.
not 30 total divided between the four children is 30 for each of your children, or let's say I'm saying that, let's assume a couple has four children. Now
Right.
they're, or let's assume, like happens in some cases, is like, you have now the older couple, now they want to start putting some monies away or shift it to the grandchildren. So they have four grandkids. So you can give to each one.
Yeah.
You
So
have a
it's
limit.
30 times 4.
Correct.
Yeah. So that's a big difference, right? So when most people are thinking, oh, I have, you know, gifting is not even something they think about, and
Correct.
if they were to think through this, there's a lot more they could do for their family members, to help them out, whether it's to send them to school or whatever it is, and this could be a great way to help them out.
Correct. Now, the recipient, there's no taxation to the recipient. There's no taxation that, what is required is that you file a return. There's a gift tax return that needs to be filed.
Hmm.
Again, a lot of people miss it. They don't do it. They're ill-informed. Many tax professionals do not do it. They lack or fail to ask the question. And so I don't tell you. I mean, you never asked me yes, I gave every year. The last 10 years I've been gifting, you know what I mean? Some of my stocks to my children.
Right.
So it's a question that should be asked,
Hmm.
and you as a tax and listener, you need to be aware. And the reason is because then later, if you get audited, or one of your children gets audited, because all of a sudden they start seeing these monies popping up in their accounts, might not be showing up so much. If you have, let's say, a healthy estate, probably it doesn't become so noticeable on your end. But one of your children or grandchildren, all of a sudden they open a bank account, and call it 30 or even 15,000 pops up in their bank account. They're going to be, where's the money coming from?
Sure.
It
Right.
becomes an immediate red flag for the recipient. Now, the recipient is not the one that needs to be concerned for taxation. It's okay. So where the money come from? Oh, it came from grandpa.
Right.
So where's the gift tax return? Oops, it doesn't exist.
Yeah. So the person gifting needs to be filing that gift tax return, basically just claiming the fact that they are, gifting this money to such
Correct.
and such individuals. So
Correct.
it's basically keeping an audit trail, for another
Correct.
word.
It's
It's
an
just keeping an
information
audit
return.
trail.
Correct. It's
Yeah.
an information return. Yeah.
Yeah. That's awesome. I think this was great.
Yeah.
I think everybody should know this.
Yeah. Yeah. And so again, this is what how we've been, and the why I love the affiliation, the work that we're doing together, because the importance of educating, not just to
Yes.
how much you and I individually know, because that's what happened. Many tax professionals out there, yeah, they're well informed, but it is taking that information and educating your own clients.
Absolutely.
And it's important for them to be aware, because now when they're gifting, they're gonna be calling me. You know what I mean? Or big, you understand what I'm saying? It's not
Yeah.
all the burden is not on my shoulders. You know what I mean? Because now the more informed and the tax wise our
Yes.
entrepreneurs are, they also start contacting. Hey, by the way, I'm about to do this.
Yes.
What is the impact of this? I'm about to do it. The problem is that once you completed a transaction, there's not a whole lot we can do as far as tax planning. The event
Exactly.
already occurred. Yeah, I mean, it's
Exactly.
before you're gonna do the either the purchase of the piece of real estate, before you sold it, is when
Right.
we need to do the planning.
Right. Absolutely. Yes, it's the same way. For example, I know, sometimes, a client would ask like, well, I wanna rent out my house and I want to do an Airbnb or I want to do this. It's like,
Correct.
well, before you do it, this is when we need to have a conversation, So if you
Yeah.
go out and do it, at that point, all we can do is just report on it. There's not much
Yeah.
else we can do. Versus if you let us know ahead of time that you're thinking of doing something, then what would be the effect from a taxability standpoint and all, from a reporting standpoint, then we can actually jump in and guide, the client and say, okay, this is how it's going to be and this is what's going to be. And we can help them out ahead of time. So, well,
Yeah.
yeah.
And the same happens in other aspects of business, not only taxation, but I mean,
Yes.
the certain other events. You're thinking about. Let's say, for example, you're planning on selling your business.
Hmm.
The time is before you are in the process, because this might, one of the things that happen is, and this happens very often, I mean, you're going to
Hmm.
sell your business is not ready to be sold, meaning
Right.
your records are not in order. Because your records are not in order, your valuation is going to be lowered because
Yes,
you have no way to
absolutely.
prove your numbers. Then they're going to get upset like, but listen, if you call ahead of time
Yes.
and you tell her, listen, I'm planning on in 2022, by in the first quarter 2022, to sell my business. Well, now is the time to sit down. Let's kind of clean up and let's make sure
Yes.
everything is in order. Let's make sure that any type of tax filings are done, that all your licensings are done, anything that has to be updated is updated. So then when you're going to be selling, all of the information is readily available. It expedites the process. It gives confidence to the buyer.
Of
These people
course.
have a business. This is has value for me. What causes a lot of hesitation why so many businesses do not sell is because, again, they're not ready. They start asking questions. Well, let me call my accountant, and now that, of course, he or she is not ready, because you're
Right.
gonna tell them that you're gonna be selling, and guess what? You never brought the information for even 2021, so your accounting is not even up to date.
Yes. Yes. I've had that experience with a client of mine that actually is purchasing multiple businesses, and I help him with the business valuation. And and some of this is exactly like what you gave an example, exactly happens to us because he goes in and he asks for the records come to me. I'm comparing the tax returns to the internal records, and
Yeah.
the stuff that I see sometimes, I'm like, wait a minute, they don't even match at all, and it doesn't make sense. So it's not like, for example, the difference is based on timing or depreciation or specific, let's say, tax rules versus gap rules. It's more like randomly different
Yeah.
numbers. And of course, when I go back to my client saying, this doesn't make sense. We cannot work with this. So, and of course, after he has a few conversations, he just backs out of it. And now the person that we wanted to sell the business is in a bad place because they weren't ready. They weren't ready to sell. They just got hyped up. They wanted to sell, but they're not really ready. Nothing is being
Correct.
in completion. Records are not available. And if, and my client is that if something is taking more than 3-4 weeks that's it. He moves on.
Correct.
And
No.
that's how an investor is. If they're ready to purchase, they have the money. They want the records to be ready. They want the valuation to go through fairly fast, and especially now it's available with the different types of software is
Mhm.
available. They don't want to wait weeks and weeks and weeks for the seller to produce records because then at that point there's no credibility.
Correct. No,
Yeah.
you're right, and then it makes a huge difference, Marie. Not only the confidence, the pricing.
Mhm.
Probably
Oh
people
yeah.
don't realize how much difference does it make when you have this information. When you can present your numbers, and like you say, it matches your tax return. They're gonna ask you a question, and you seem to kind of have the information readily available. You know
Yes.
what I mean? Having a professional team behind you, they don't realize how much value. You know what I mean?
Mhm.
Can I talk to your legal advisor? Yes, he's Mr. Smith. Can I talk to your CPA accountant? Yes, it's Marie. You know what I mean?
Mhm.
And then it seems like you have I have my financial advisor, I have my attorneys, I have my financials up to date, my
Yes,
returns have been filed. All of that adds value, and a lot of times people don't realize the
absolutely.
difference that makes, and not only, like I said, the confidence of the buyer, but also the pricing. I mean, the value that all of a sudden increases just because you already invested on that. So it's all a matter of proper planning,
Yes,
preparation before you're gonna go and borrow. That's another scenario for another a
of
discussion for
course.
another day. You know what I mean? Like,
Yeah.
you know what I mean? Like, those are events. Again, I'm not now talking only about taxation, but you can see the planning
Right.
when now we're talking about business decisions you're gonna make, the importance of getting your professionals involved in the early stages
Of course.
before you already pull the trigger. You know what I mean? Oh, by the way, I'm already doing the application with ABC Bank, and they're asking me for projection, the last 3 years financial statements. Like,
Right.
"Well,
Like,
never told me."
I know. I know. And at that point, even and from an accountant standpoint, when your client is asking things last minute, you're like, well, we haven't even looked at your numbers. I'm not going to just
Right,
randomly give you something I haven't checked, I haven't
correct,
confirmed. So yeah, and then from a client might think that, well, he's not, he or she is not jumping on this and then getting things done. But it's like, from our standpoint, we are bound by high ethical standards.
exactly.
We want to do things the right way. So we are not just going to give some financials to a loan officer and be like, oh yeah, this is good. But and we haven't done our due diligence to make sure that it is accurate and it's reliable.
Right,
So, and that's something that, business owners should be
correct.
very well aware of.
That's why they
So,
ask, well, we need a CPA to, in essence, to validate, in
yes,
essence, put a stamp of approval on these numbers. And it
yes,
doesn't matter that they're not necessarily audited. They want the CPA to look at those numbers, and there's a reason behind it. Oh, Marie, just put whatever number. No, 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 no.
yeah.
Whatever numbers is,
It's
guess
so
who
funny
you're
you
gonna
say that. Yes,
call?
we've
Guess
heard
who?
those. Can you
Yeah.
just put any? Just put something.
Yeah,
Just
just put something. You know what I mean? It's like,
no.
I giggle every time that, you know what I mean. Like, they put us under these. Like, what do you think we are? I mean, like, what? We just throw some numbers in there. I mean,
Exactly.
why then do you need a CPA for that? You can hire anybody for that. If you understand what I'm saying, all you need is throw some numbers in there. Come on,
Yes.
Marie. How hard can that be? Oh, Marie, by the way, I gave you the QuickBooks. Why are you taking so long? Because those damn numbers in there have no, they don't match anything. It's just a bunch of information thrown into a bucket. You shook it, and here, Marie, now
Yeah.
prepare financials.
Oh yeah, I mean, yes, it's so funny you say that because yes, it does happen quite often where they ask these random things, and in my mind, I'm like, and sometimes in a serious way, I have to come back and be like, I'm sorry, I'm not putting my license on the line for something like that. You're gonna have to find someone else.
Yeah,
Sorry. And it's not about not wanting to help people. It's just that
yeah,
we are bound by very, very important high ethical standards. We
very,
work
very
very
strict.
hard
They don't
for
realize.
our experience, for our license. We are bound by the continued education we have to do. So when we're working with clients, we want to make sure we're doing all the right things that is required of our profession.
Yeah, yeah.
So yeah. Wow, we talked slightly a little over the 30
Oh,
minutes, but I hope everybody was enjoying it. So we can go on forever like this, but
yeah.
we will stop and continue on next week. And we will have more interesting information for you to be able to implement in your business. And of course, whenever you need us, we are here. Make us, two of the five people you should have around you to help you and advise you on your business and your personal life. Thank you so much for your time, and we'll see you next week. Bye.
Thank you.